Hey, y'all, this is Bill Doran with Diamond Guard Insurance here in Texas, and I am joined in our continuing series on first-time home buyers. We're trying to bring good advice to our first-time home buyers. And today we are able to welcome two ladies with a company called the Lone Ladies Mortgage Group. So what do? They work with mortgages. So we have the pleasure of being joined by Whitten.
Hello.
And Leah Wood. Welcome. Thank you very much for taking the time to meet with us. How are y'all doing today?
We're great. We're great. Thank you for having us on. We love to be a help if we can be for your first-time home buyers.
Well, we thank you very much for doing that. So I'm going to jump right into the questions. And this was a question I had when I bought my first home, and I've still always wondered if I did the right thing. There's so many different people that are part of this process. You know, you got the realtor, you got friends, you got bankers. Who do I start with? Who do I talk to first? What's the very best advice that you can give to our people that are looking for a home?
I think that's a great question. I think the very best advice I would give a first-time home buyer who has never looked at purchasing a home before is you need to call a lender first. And this is really different. This is really different from everything that we have ever done in the past when it comes to financing. When we go shopping, whether we're shopping for clothes, whether we're shopping for furniture, we pick out the clothes, we pick out the furniture, and then we go to the register and we open a credit card. And or even with a car, you typically look around, you go to the different dealerships, you find the car you want, and then you go to the financing. And that is truly the opposite of what you need to do when you're buying a home. You really need to talk to a lender first, and there are truly a billion different reasons why in everybody's specific scenario and situation. But we're going to talk about a couple that really hit home with most people as to why you should call a lender first. First and foremost, it's what can I afford? Everybody has it in their mind. They know they want to go buy this $400,000 home. But the question bears, can you get financing for that? Can you truly afford it? And just because you think you can afford it does not mean the bank's going to agree with that with you. We look at very specific things. And so you want to get a really good idea of what do I qualify for? What will the bank be willing to lend me as far as money? You also want to know, you have an idea that you want this $400,000 home, but have you seen the payment that goes with it? You know, a lot of people will jump on realtor.com and they'll look at the mortgage calculators, and those are amazing and great tools, but often they're looking at best case scenarios. They're looking at the best credit. They're looking at the largest down payment. So they're looking at the lowest insurance. So you might be a little misguided as to what your actual monthly payment is versus what this mortgage calculator has told you your monthly payment's going to be. So I think it's really important to get everything in line. You want to know, like I said, number one, what can we afford per the lender? What will the lender approve me for? But number two, what can we afford based on what I want to spend per month? Again, I may end up approving you for $500,000, but I may tell you that payment and you may say, oh, tap the brakes. That's not what I'm good at like $3,500 a month. Okay, well, that might be more like a $375,000 home. So it's really getting in line with what your monthly payment is going to be in correspondence to what that sales price is going to be and what the lender will approve you for. The next thing is really like, what does that mean as far as down payment? What does that mean as far as closing costs? Most time when I talk to first-time home buyers, they don't even know what closing costs are. No one's mentioned closing costs to them.
Okay. Those are big.
And they are big. That's absolutely right. Like most people know, hey, I have to have a down payment, but they may never have actually heard of closing costs, and they don't realize that they are responsible for coming up with that money, and they definitely aren't understanding that can be as much, if not more, than the down payment. So really talking to a lender first, getting pre-approved first is going to give you a really good idea of where to start. Okay, I'm now approved for a $300,000 home. I know what that means as far as a monthly payment, and I'm comfortable with that. And I
Mhm.
know what that means as far as down payment and closing costs, and I have a game plan for that. Um, I think those are the main reasons why I would say talk to a lender first.
Okay. And that makes a lot of
I also
sense.
think too, real quick, I think
Yeah.
it's important for people to not fall in love with a home that they could never afford.
True.
We do see that sometimes where people will come to us and they have this idea of what they think they can pay, and that's not anywhere near what they can pay. And then they don't like anything they see at their price point because they've seen the house that they can't afford. So yeah, we always tell people to speak to us first for sure.
Yeah. So is this actually pre-qualification, or is there a difference between what we're talking about getting an idea versus getting pre-qualified, or is it actually going that far? I really don't know what pre-qualification means exactly.
So there's a subtle difference. You can
Okay.
be pre-approved when we're just going off of basic application. Maybe they've sent me pay stubs and W-2s, but it hasn't gone as far as going through an underwriting approval. Underwriting approval is where we send it into either an automated system or an underwriter to preview all the buyers' personal information along with their application, and they give us the green light to move forward at a certain price point.
Okay. But with your experience, you would, even if you didn't go to that step, you'd have a pretty good idea of where they'd be able to come in.
Correct. And most of the time on a pre-approval letter, I can do everything.
Okay.
If it's a circumstance where it's something very unique, because people have unique things happening in their life. They have unique jobs. They have unique personal business. There's so many different unique credit situations that sometimes if there's a question, if it's not just black and white, if it's right there in the gray, then it's a better step to take it one step further to have an underwriter take a look at, here's X, Y, and Z. Are we good with this?
Okay.
Because the last thing we want to do is say, yeah, you're good to go. Even though it's in the gray, I'm not 100% sure. Send everybody out there. They get a contract. And now the underwriter said, oh, no.
No. And that's why they need to talk to you first to get the very best information they can have. So they've decided, yes, I'm going to talk to my lender first. What documents would they put together to make their time as well spent as possible?
I would always suggest, number one, first and foremost, your income documents. So if you are a W-2 employee, that means I'm going to need W-2s for the last 2 years.
Okay.
And I'm traditionally going to need 30 days worth of pay stubs. So if you get paid weekly, I need 4. If you get paid every other week, I would need 2. We want them to be current pay stubs. So we're using the most current information available. Okay. If by chance you are self-employed, now I'm needing tax returns. I can't just go off of what your 1099 says. I can't just go off of what you're telling me your bank account shows. I need your actual tax returns because I'm going to be reviewing the bottom line figure, which is also a sticking point sometimes. Self-employed individuals don't realize that we don't go off the gross. We go off the net when it comes to self-employed individuals. And if you have ever been self-employed, as I have, you know,
I am.
try to write everything off, right? We don't
Yep.
want to pay the IRS, and I don't blame you. But that can hinder you sometimes when you're buying a home. So, providing full tax returns. So when I say tax returns, I'm not just meaning the first 2 pages. I mean all schedules. Okay. So you're going to send me the full packet, reach out to your CPA, have that ready to go. Assets are very important when you're buying a home, and they can make or break a file. So I always say, have your bank statements, most 2 months bank statements available. And if you have retirement accounts, whether it be 401k, whether it be an IRA, get your most recent IRA or 401k statement available. A lot of times those are quarterly, and that's fine. The most recent quarter is completely fine. If you have additional income, so Social Security, child support, anything like that, where you're like, oh, by the way, I get $700 a month in child support. Fantastic. I really need proof of that. Can't just be sometimes he gives it to me, sometimes he doesn't, sometimes it's cash. It needs to traditionally, I'm not saying I can't ever do that, but traditionally I need it to be from the OAG. I need some kind of proof that you're going to be receiving it. The rule is on any of those extra incomes, Social Security, pension, child support, that you're going to be receiving it for at least 3 years moving forward from the time that you purchase. So if you have a child that is turning 18 and that child support is ending next month, I can't use that income. But better to have all the documentation together, prepared. So when you do call me and we're going over the different questions and I'm asking the hard questions and I'm asking, hey, what does the net look like on your self-employed or on your pay stubs? What kind of overtime do you have? What kind of bonus do you have? You have that right there in front of you, or you can get it to me very quickly. Another thing I would suggest with a W-2 borrower who is receiving bonus or commission, I always have to use an average. And most of the time, I'm going to get that average from the employer themselves. So I would suggest go ahead and talk to your employer and find out how you verify income. Do they have a number that we call? Is there an HR department? Is there somebody that I can send something to verify your income? Because a lot of times those people that make bonuses and commission, that's a big chunk of their income. Mm-hmm. So I need to know what that average is. And I can't just go off of your last paycheck where you made $10,000. Is this normal or is this a one-time? So having that information, I would definitely say is the most pertinent information to have. So anything on your income and anything on your assets.
I got to tell a quick story. You're taking me back because I forgot I haven't bought a house in a while. I forgot how much this is. The first home I bought was in 1993. My wife and I had been married for a year. We just moved to Houston, Texas, and going through the whole underwriting process, I got a note from my lender said, hey, there's this $127 bill that you're late on. Can you give us a reason for it? And it was like a JCPenney bill that my wife hadn't paid on time. And I was just like, really? But, they ask a lot of questions. I don't know if they're still asking to that level, but there's a lot of questions. So working with an expert definitely helps. So that same home, it was all about having to put 20% down, and that was really hard to do back then. And I suspect it's probably even harder to do today with the way the house prices have gone up. And what if they don't have a lot of money available for the down payment? Do they still have options available?
Absolutely. Absolutely. There are so many options available for not only first-time home buyers, but maybe this is your second time buying. Maybe for whatever reason, you're not having a lot of equity in your current home. You're having to sell it. Maybe you're going through a divorce. Different things happen. Mm-hmm. For first-time home buyers and for people that are buying their second and third home, there is down payment assistance programs available. Not only are there down payment assistance available through the state at the state level, they have it available at the county level, and they have it available at the city level. And it's super important to work with a lender who knows that because, yes, so often people have money saved. But yes, with our home prices the way they are today, most people don't have even, FHA and conventional. If you're a first-time home buyer, you could be looking at about 3.5% down, between 3 and 3.5%. That doesn't sound like much. But now to a first-time home buying home might be a $350,000 home. Back in the day, we were buying $75,000 as starter homes. Like, that's not the case anymore. Now these kids are truly having to buy a big home and take out a big mortgage. And so coming up with 3 to 3.5%, that's a lot of money. Yeah. I really feel like for any individual, especially first-time home buyers. So down payment assistance is a great option because they are going to give you money for that down payment. And let's say you have down payment money. Let's say you've been blessed enough that you have 10 grand saved and you're ready to go. Well, what if the home that you pick, the sellers won't give you closing costs? Now closing costs are another $10,000. Where do we come up with that money? Now we're talking $20,000. It could seem to a lot of first-time home buyers like, I'll never be able to do that.
Yeah, why bother? I'll just rent.
Exactly. There's no way I'm ever coming up with that much. But the truth of the matter is You can use these down payment assistance programs, these grant programs, these state programs, not only for down payment or closing costs. So you can use it either way. And most of them are that way, where you have an option of using it however we need to use it. But we are lucky enough currently in Texas to be in a little bit of a buyer's market. Homes are sitting a little bit longer. Sellers are more willing to work with buyers towards helping them pay for their closing costs. So we have a lot of individuals that come to us with $2,000 or less in the bank to buy a home. We get the down payment assistance for the down payment. We get the seller paid closing costs. And now they have very little skin in the game to even get into the home, and they are able to purchase something they never thought was possible.
And that's great. I mean, that's great. And, there's a lot of people, you read the articles all the time. I have a 25-year-old daughter who isn't sure she'll ever buy a house for the exact same reasons. And just knowing that there's stuff out there like this is just, hopefully this helps somebody think, okay, yeah, I can buy the house. I really want the house. We want to do it. So
it's worth a call. And there's all different types of programs. Some people will look at it and say, well, I have to have a certain credit score. Well, I will tell you, there are so many different down payment assistance programs, and a lot of them go down to very low credit scores. And if you're not in a great place with your credit, and I didn't mention this earlier, but truly another reason why you should call your lender first. Maybe your credit's not quite where it needs to be. We need to work on credit. That happens all the time. But please don't be discouraged and not call, because a good lender, we will walk you through everything. We look at credit every single day. And so we literally walk all our clients through, some that are not quite there. Maybe they're real close, but not quite where they need to be to qualify. We walk them through each thing that they need to do to fix their credit, to repair their credit, to get it up to the points that they need to be in order to qualify. And we do it for free, and we follow up with our clients. Like, we follow up with them every 30 days just to touch base, because sometimes it's overwhelming. You're dealing with collectors. Yeah. You might be dealing with, trying to get something out of dispute status. There are things that, honestly, they don't teach enough about credit in school. They just don't. And I don't know
they
why.
Do not.
Because it affects everything you do as a grown-up. And so, we really try to educate our clients that, look, maybe you are not there right at this very moment, but I'm going to give you an A, B, C, D to do. And then we'll hold your hand through the process. That way, 6 months, maybe 30 days, some it's 30 days, some it's a really quick fix, some may take a little bit longer. Maybe we've got more stuff going on, but we will walk you through it to get you there. And so I always tell people, listen, I know maybe you don't have a ton of money saved. Maybe you have some, keep working on saving. And maybe you're a little discouraged because your credit's not exactly where it needs to be, but we're going to help you with those steps. You keep saving. And then we'll use that down payment assistance when you're ready. But, I always tell people, a lot of people will say, well, you have to have a 620 for down payment assistance. That's not true. Not all of them are 620. So if you have a lender that has multiple outlets for down payment assistance, I will tell you there are other options besides needing a 620.
And I think that advice is worth the phone call to y'all anyway, because, I think a lot of people are frustrated. They don't know what to do. They might be a little embarrassed because it is something that you feel like you're getting judged on it. But I think just knowing that it can be fixed and having somebody help me do it, right? Because I learned the hard way a long time ago. When I got a call from a collection agency, not a credit card company, and I had no idea what my credit card score was. And so somebody had to tell me, this is what you need to do. There's nothing wrong with it. No, they do not teach this in school.
They don't.
And that's, just have to accept that. And if you can find somebody that can help you with that, that's wonderful. That's a great service that you're doing.
Yeah, we always tell people, like, don't be embarrassed. Don't be worried to come to us and talk about it, because we have seen everything. Like, Crystal's been in the business 24 years at this point. I've been in it 10 with her. Like, we've been a little team for 10 years. We've got more loan ladies too, but we've seen everything. Nothing bothers us. We don't judge based on it. We just tell you how to fix it. And then some people may not take our advice and they may not ever buy. And that's that is their choice, but we really do give them the tools that they need to move forward. And we don't charge for that because we've seen people come to us that have been doing credit repair with somebody for $500, $600, $700 a month.
Yeah.
And they're just paying for them to dispute their accounts, which doesn't help anything. So yeah, definitely worth a call for sure.
Yeah, that's great. That's great. And, having you talk about that just hopefully reminds people that a lot of people deal with this kind of stuff. You're not alone in this, and don't be embarrassed by it. It's just part of what happens sometimes. So you can get it fixed.
All the time, everybody has stuff. And if they say they don't, they're lying.
Yeah.
Yep, they're lying. People don't go bragging about my bad credit score, but
yeah. And we tell people to confess their sins to us now, because we will find out whatever it is. If you don't tell us you have child support and then you actually do end up, you are ordered to pay child support, we're going to figure that out. So we like to get everything up front.
Just get it there. And if you can't buy for a year, you can't buy for a year, but you know what to do in that next year to put yourself in a really good position.
That's right.
That's great. Let's say you have somebody that says, I'm not buying for 2 or 3 years. Is there any score they should be working towards? Or is that pretty much?
I mean, always in the 600s or better. You're going to have more options. That's the bottom line. Below 620, like at 620, you could go conventional. You can go FHA. If you have a unique situation, maybe you're self-employed and need to qualify using bank statements or some other different type of non-traditional financing. The 600s are the better place to be. If you're in the 500s, that gives you less options. So I would say between 620 and 660, you're going to have really either or options and more of them.
So if you're below 600, you absolutely should make the call today.
Yes,
if you're in the 600s, we can still get better. So you might as well make the call as well. Okay.
Yes.
Perfect.
Yes.
Is there when I've looked at homes, they look at a ratio, your income to the amount of debt you have. I don't remember all that. That's something to talk about. Is there anything you wanted to hit on that right now?
I mean, so there's something called the debt to income ratio. That's very important when you're doing a mortgage. That is going to tell us how much you qualify for, what we think that you can afford. The debt to income ratio is based on, if you're a W-2 employee, your gross income. If you are self-employed, your net income, versus the amount of the mortgage payment. That is part of the ratio. And also the income compared to your total debts, which is your mortgage payment plus every debt listed on your credit report as far as the monthly payment. So it's a little confusing, but for the most part, we're trying to keep you around 50% or below, which means we're using 50% of your gross income. So that's a lot of money, because most of us are not going to bring home that much, right? So but we could definitely walk you through that as far as that's concerned. If you have questions about your debt to income, most first-time home buyers don't quite understand what that is at first. And if we need to have a conversation, if that is the reason that you cannot qualify because of your debt to income, then I'll go through that like step by step and really get into the details and explain how that works specific to your situation.
Okay. I was always told, don't go buy a new car right before you're going to apply for a loan, right?
Please don't. Yeah, no, I mean, if I would give you some quick tips, as far as if you just had a few tips on what to do before you buy a home, some just the best things, I would say for jobs, for your income, if you're going to make job changes, let me know first. Again, talk to your lender before you decide to change your job. And the reason is, number one, if you go from being a W-2 employee to being self-employed because you decided I'm going to do this on my own, totally fine, great, amazing, but you have to have a history of it. I need a tax return. Most people will call me, hey, I've been, a plumber forever. I've worked for this plumbing company forever. I decided to start my own plumbing company. I've been doing it for 25 years. I believe you. And that W-2 income was great, but I can't use that because you left that job. Yeah. And your new income hasn't quite been established yet because I don't have a tax return. So now you're in this limbo where you really don't qualify for much. There are some programs you can still do with limited self-employed income experience, but you're going to have larger down payment and higher rates. So don't be making crazy job changes without talking to your lender. As far as W-2 employees, I say this: don't go from a salary or an hourly rate to mostly commission. Again, like I said earlier, for commission and bonus, I have to use an average. I can't go off of this one time you made $10,000. Awesome. If that never happens again, then we don't have that income. So it's another thing they don't think about. They may think, hey, I've been making 80,000. I got an offer. The base pays only 50, but I'm supposed to bonus at least 50,000. So I'm going to be making 100, but I just started last week. Well, that means I can only go off the 50,000 because we don't have a history of making that extra 50,000 in bonus yet. Okay. So if you're thinking of buying a home and you're also thinking about changing jobs, talk to a lender first to see, is it going to be okay? If you're just changing from one W-2 job to another W-2 job, same field, basically maybe a little bit more per hour, that's probably going to be fine. Nothing to worry about. But if the way that you're getting paid changes, that's going to be a red flag. Okay.
Okay. So no major changes right before you want to go buy a house, or at least think about it. Talk to y'all.
No job changes. As far as credit, you mentioned like don't go buy a car. Very important. That comes back to the debt to income that you were talking about. I'm going to be comparing everything to your income versus your debts. And all of a sudden, if you go out and buy $500 new car payment that I wasn't calculating before, I may have had you maxed out before. We may have been at the tip top of what we will approve at $300,000 with your current debts. Now you just added a new car for $500 a month. I don't have room for that. And now we can't qualify for the home. And I know it seems so little and trivial and you just don't think about it, but it can be a big deal. So don't co-sign for someone that will also bite you in the butt. If you're looking for a home, you've already talked to a lender, you're all pre-approved, you're out looking for homes, and your niece calls and she just needs some help and you're going to co-sign for her. Talk to your lender first. I will always say this: call your lender first.
Call your lender first.
Can you afford that new payment? Is that new payment going to make it where you can't buy the home you're trying to buy? That's a problem. Credit, if your credit is right on the edge and I just got you approved and I said, please don't talk or look or breathe on your credit because you're there. Okay, but we don't want it to go down, right? And then you go open a credit card or you get a new collection. They do what's called like a soft credit pull. It's not an actual credit pull, but it's a soft credit pull 10 days before closing. So we've gone through everything. You're ready to close. You've got everything packed up in your house. And then you went and opened a new credit card, or you went and bought a car, or you didn't answer that collector that called. Like if the collector calls when you're in the middle of buying a home, please pick up the phone, set up a payment with him to keep it off your credit. You know, that is super important because your credit is so delicate and it could definitely swing it. And while we don't re-pull credit, it is required across the board. It's not a lender specific thing. It's a mortgage specific thing where you have to do a soft credit pull 10 days prior to closing to see like, what can we, is there anything new that's popped that wasn't on that credit report before? And is it something that we need to be concerned about? In collections, new debts, new cars, these are all things that we question. Okay.
And we verify employment a couple days before closing too. So don't go quit your job.
Still be there. Don't get mad at anybody.
Exactly.
Well, it is amazing because after we bought we bought a condo about 5 years ago to live in, and right away we had to go out and refurnish it because we were downsizing from a home. And so we went out to various stores and bought stuff, and they all offered, 12 months free interest. So, but you open up a revolving line of credit and everything. I was amazed at how much my credit score dipped just for a short period of time, but it kind of made me mad. I paid it all off right away. But, it's just amazing how much opening a couple of those accounts up can make a difference really quickly. It's a good thing we did it afterwards as opposed to ahead of time.
Right. That was smart. So
yeah, I wasn't thinking. I just got lucky at that point in time. But
or going late on a payment too. If you miss a credit card payment or something like that in the process, that can really lower your score too. And hopefully that doesn't matter. But if for some reason we do need to repull credit and your score has dropped drastically. It can be a big issue.
Does missing being late on an electric bill or anything like that, does that affect it? It's just credit cards, right? I mean, and
what's on your
loans.
credit. Just
Okay.
so when you're thinking about what actually reports to credit. So
Okay.
I don't care about your cell phone bill. I don't care anything like that. But unless it's getting put as a collection, then I care.
And you care. So
Auto
stay up to
loans,
date.
student loans, credit cards, any like payday loan, if you do anything like that, small loans like that, those all matter.
Okay. All right. Well, we're going to call this, I think, call your lender first. So people will know what our message was in here. And it's complicated. They ask a ton of questions. You're going to ask questions, but it's not because you want to know all this stuff. You have to know all this stuff, and people
Correct.
need to go through it. And I just think, knowing that you're qualified, then be able to go out into the neighborhoods and falling in love with the house can make such a big difference, and just knowing it. So, I as we wrap up, is there any other last piece of advice you'd like to offer? And then, I'd love to get, how will they call you? How will they get in touch with you? I know you have a lovely website that I've been looking at, loanladies.com, but how would they get a hold of you as well?
They can always reach out to me. I'm the branch manager, and I can give you my phone number. So y'all can call, you can text. We have Facebook. We're online on Facebook. You can always reach out to us. We have a website. On our website is our application link, so you can easily pop on and fill out an application. And it also has my email address and phone number. So if you were to pop onto my website and you are just wanting to know questions, you have a lot of questions before you want to fill out an application, which is very normal. So don't stress about that. You can always shoot me an email, call, or text, and I will get back with you ASAP.
Okay, awesome. And that's Crystal. So again, my fault that we have this technical difficulty at this point in time. We're going to try to fix it, but that is Crystal, and that is Leah. Wave to it. Thank you, Leah. Well, we really do appreciate your time today. We've worked with you, as you all know. We're an insurance agency, and we've worked with them in the past, and we've been in the Chamber of Commerce with them and everything. We can speak very highly of this particular group. So I just want to thank you very much for coming and working with us, and I hope people take your advice to give you a call first.